how to manage 401k investments. If you have a 401k or even if you have a previous 401k, we're going to talk about how to manage those investments effectively so that you can make the most of your money work for you. I am Tiffany Thomas, your Wealth Mentor. I achieved financial freedom in my 30s and became a millionaire at 40. I'm here to help you do that even earlier and easier. So let's dive right in. All right, let's talk about how to manage your 401k investments effectively. I'm going to give the basics of a 401k, and then I'm going to talk about investment options and how to look at those options and determine what would be best for you. And then I'm going to share how I review the 401k plans that my clients have. Because honestly, this is one of my favorite things to do with my clients. When they already have a 401k, but they have no idea what they are invested in, we review this together and I help them choose investment options that are going to benefit them the most. Let's first discuss the basics of a 401k. So a 401k is provided by your employer, and they can have the option of a traditional 401k or even a Roth 401k. And sometimes your employer will offer a company match, which means if you invest up to a certain percentage, then they will match the percentage that you are investing. So if you don't know if your company has a 401k match, definitely find that out because we want to take advantage of the company match because that's essentially free money that we could be receiving. And if you're trying to decide between a traditional 401k or a Roth 401k, let me just share a few differences and similarities. So you can invest the same amount in a traditional 401k and a Roth IRA. But with a traditional 401k, you are putting money in that is not taxed yet, so you're getting a tax break up front. And then when you pull that money out, you will be taxed on that money. So you'll pay taxes on whatever money you take out later on. And then with a Roth 401k, it is the opposite. You would put money in that you've already paid taxes on, and then it would grow tax-free inside of your Roth 401k. So when you take your money out, you do not pay any taxes on that amount. And something that can be a little bit confusing is when your employer is offering a Roth 401k, if they have a company match, they're actually going to put their match inside of a traditional 401k, but you would be contributing to a Roth 401k. Later on, if you end up quitting that job and you're no longer able to contribute to your Roth 401k and you want to roll that over to maybe Vanguard or Fidelity to another brokerage firm, you're going to have to roll it into a traditional IRA for the part that your company has contributed, because that would be from a traditional 401k, and then you would want to roll your Roth 401k into a Roth IRA. So that's just a little side note for you, because I've had this happen with some of my clients before, and it can be confusing for them. And again, I do want to emphasize to at least get the company match that your employer is offering. And you may not want to contribute any extra into your 401k, and we're going to get into that in just a moment. But make sure and at least get the match. And then the next part that I want to talk about is when you are trying to decide what to invest in inside of your 401k. Because when you set up your 401k, it does not mean your money is invested. You actually have to choose what you're going to invest in inside of your 401k. You want to consider your risk tolerance. If you have a really high risk tolerance, then you can invest in all stocks or even mostly stocks. And I go into more detail about risk tolerance in another video. I will leave a link above. You can check it out later on. But essentially, you want to factor in how much you are able to handle if you see your investments drop significantly, and you want to know what your time horizon is for investing. Because the longer the time horizon, then the more we can put into stocks. And if you are able to handle fluctuations in the market, then again, the more we can put into stocks. For example, if you're in your early 30s and don't plan on pulling this money out until you're in your 60s, and you have a high risk tolerance, then you can invest the majority of your money in stocks. And I actually made the mistake when I first set up my 401k, I was in my 20s, and I chose an investment that had stocks and bonds in it. And I realized later on that I didn't need any exposure to bonds because I didn't plan on pulling that money out anytime soon. So once we know how risky we can be in regards to investing in stocks and in bonds, we want to actually choose our investment fund. Usually with 401ks, there are a number of different funds that you can select to invest in. And it seems like recently employers have been offering more ways to invest inside of a 401k, but I'm just going to stick with the majority of 401ks. Your employer will probably give you a list of different funds that you could invest in, and you'll want to select at least one fund, and you could select even more funds depending on your strategy. But for me, the way I work with my clients when we are reviewing their 401ks, we take a look at that full list of options that they can invest in inside of their 401k. And most of my clients have a high risk tolerance. And when we are looking at the list of funds, we want to take a look at the expense ratios tied to each fund. And if you are confused or you can't figure out where the expense ratio is, you can definitely reach out to your employer, if it's the HR that's over the 401k plan, and ask them to show you the expense ratio, because this is really important. We want to make sure that we are choosing funds that have really, really low expense ratios, like 0.04% or 0.08%, something like that. Anything close to 1% is actually a really high expense ratio. And that may not sound like a lot, but over time that is going to add up to thousands and thousands, and could be even hundreds of thousands of dollars depending on how much you are investing. But if we want to keep the majority of our money, we are going to want to pick a good fund that has a really low expense ratio. And what I've seen a lot with my clients is that they think they need to pick 5 different funds or 10 different funds and have exposure in all of these different funds. But honestly, a lot of the funds end up being similar, so they're just overlapping their investments. So you can actually go with just maybe one fund. For example, if you have a fund option that tracks the S&P 500 or even the US total stock market, or you could even do an international fund, but we don't need to be doing the S&P 500 fund and the total US stock market fund because there's going to be too much overlap. So I would say, honestly, maybe pick 1 or 2 funds with the low expense ratio and the exposure to stocks and bonds that you want, and call it good. And honestly, if you are finding this a little bit confusing and you want help with your 401k and with investing in the stock market, I have a free masterclass where I go over how I can help you invest in the stock market, and we can definitely review your 401k. I will leave a link to that masterclass below in the description. You can click on that and check out the free masterclass. And then another thing I want to mention when you are selecting your investment fund inside of your 401k is that past performance does not always guarantee future performance. Of course, we want to take a look at the past performance and see what the return has been. Because if it has been super, super low, then we probably don't want to invest in that. But if it has been a little bit higher than one of the other funds, that may switch over time. So looking at past performance is not a full guarantee of future performance, but it can give you a fair idea on how it may perform in the future. And I know that when 401k reps come in to the employer and they have a big meeting with everybody, a lot of times they will recommend a target date fund, which is going to have a certain percentage of stocks and a certain percentage of bonds inside of that one fund. And let's just say, for example, they call it a target date 2055 fund. That just means that you are planning on retiring in 2055. So the closer you get to the year 2055, then the more they are going to put into bonds, and then the less they are going to have in stocks. If your risk tolerance is higher, then you may want to choose a target date fund that is even further out, maybe 2065, and that way you would have a lower percentage in bonds in the year 2055 when you were planning on retiring. But again, a target date fund probably has a higher expense ratio, and if you have a long time horizon and a high risk tolerance, then you could just choose a fund that is invested strictly in stocks. And that is probably going to have a lower expense ratio, which means you get to keep more of your money. Those are just a few things to keep in mind when you are looking at the different investment options for a 401k. And then the next point that I want to bring up is to monitor and rebalance your 401k if needed. For example, if you did just pick a fund that was all in stocks and you get closer and closer to retirement, you may want to sell some of that fund and put it into a bond fund. And the way that I like to look at this is investing in stocks is growing your wealth, and then investing in bonds is preserving your wealth. So if you are getting close to retirement, you may want to preserve some of that wealth. But if you are far away from retirement, then you want to grow your wealth. So over the years, just make sure that you are rebalancing if you need to. And the next segment that I want to talk about is keeping a long-term perspective and knowing what your financial goals are. If you are constantly checking your 401k investments, that is probably going to drive you crazy because in the short term, the stock market goes up and down, but over the long term, it continues to rise. So if we can just realize that we are investing inside of our 401k and that is for the long term, then we're going to be less worried about what our 401k is doing in the short term. But definitely keep your eye on your 401k and make sure that you have invested your money into a certain fund and it's not just sitting in cash in your 401k. And then know what your retirement goals are. Know when you want to retire, when you plan on pulling this money out, so that you can adjust your investments accordingly. Comment below and tell me if you have invested in a 401k. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And hit the subscribe button to subscribe to my YouTube channel and hit that little bell to get notified on when I post new videos. And if you want to see even more awesome content from me, make sure and check out the videos on the side of the screen. Thanks so much for watching. I'll see you in the next video.